Welcome to Infinity Capital, everyone. Today we are going to discuss Mahanagar Gas Limited. So it's a 11,000 crore market cap company. It's a mid cap company, right? This company provides gas to Mumbai and its adjoining areas, so primarily in the state of Maharashtra. We're going to quickly go through the ratings of the company. I always come here and check what are the ratings of the company in order to understand the financial standings of the company. So they have around 700 crores of credit, long-term debt program, non-fund based limits, short-term limits. So all of this, the rating is pretty good, triple A plus, A1 plus. So ratings are pretty good. So what else can we gather from this? So this company has monopoly in Greater Mumbai. So around Mumbai, the company has a monopoly. We have in my house, we have Mahanagar Gas Limited pipeline, right? And it's more convenient rather than taking those gas cylinders. It's convenient and it's cheaper. So it's going to be the way forward. My guess is that Mahanagar Gas Limited and the company of this caliber, they are going to benefit from city-wide distribution network, because it's going to be very difficult to provide a network in villages or areas which are more spread out, because that's more capital intensive. In city, homes are closer to each other. There are massive buildings. The cost of laying out the line is cheaper, and it's more the initial cost is also less, maintenance cost is also less. But let's compare it to a village, probably a Ratnagiri or a Raigad, Kolhapur, where people are spread out. So you'll have to lay out a lot of lines. Initial cost is expensive for the customer as well as the company, right? The company definitely will charge the customer, but if the initial cost to get a pipeline is expensive, people are not going to take that. So my guess is that these businesses will flourish in cities, right? So moving forward, what else can we gather from this thing? So they have taken capex for setting up a network in Raigad. So they've achieved limited progress. Obviously, there was some problem with related to the minimum work program, and obviously it's a government of India company. So the delays happen, right? So they've submitted a revised catch-up plan in August 2018. So the total capex incurred was for around 2,400 crores, right? And all of this was done through internal accrual. So they have not taken any debt to incur this capex, which is pretty good. So when we come here and click on the balance sheet, we will see that their gross block has increased from 1,200 crores to 2,500, 2,600 crores. They have significant amount of capital work in progress. So if you see, around 560 crores of capital is capital work in progress. So this goes to show, see, ideally when the capex is done, and this, the gross block has been achieved, like the whatever capex they are doing, if they are setting up a factory or they are putting lines, by the time the capex is done, the capital work in progress should diminish, right? But if you see, the capital work in progress is pretty much stable here. That goes to show that that their project is delayed, right? So that we got to know from the rating also. So this is something that we need to take into account, right? And another thing I want to tell you about MGL is, MGL was supposed to change the meters in our building. So they did half of the building and the rest of the building they've just left it. So considering the fact that it's a government company, they are not very quick. They don't have any driving factors. It's a government company, chalta hai attitude. So that is also that also shows up in the stock. If you are a private company, you would you would go ahead and complete all your projects in time, because you might have incurred some debt to fund it, or just that you want growth in your company. For government companies, they don't care if there is growth or not, because they're getting paid. I'm not saying all government companies are like that, but there is certain amount of lethargy in these companies because of the management. Right. So what are the strengths of the company? They have monopoly in gas distribution in Greater Mumbai, and they are expanding in other areas in Maharashtra, and it's promoted by GAIL. Right. So GAIL has significant amount of understanding of the gas distribution business. So that sort of lends help to Mahanagar Gas Limited. Right. So these are the things. These are the strengths of the company. Now we are going to quickly come over and check the shareholding pattern. Right. So FIIs, they have around 30%, DIIs around 8%, public has around 9% or so. So if you see here, September 2020, the public was holding around 12%. Now they hold only around 10%. So 2% of this has actually been bought over by somebody else. So my guess is that the FIIs, their stake has increased, right? So overall, this shareholding pattern looks pretty good. From the cash flow front, they've been generating cash flows consistently. The cash flow from operations have doubled since 2016. It's pretty good. Balance sheet, no dilution in equity, right? And very minimal borrowings. This is nothing. Okay. Healthy reserves. All right. They have taken incurred capex. So obviously there is going to be depreciation. If you see, the depreciation has gone up, right? Almost 400 basis points. So this affects the profitability of the company. Until the capex, until all the pipelines are laid, and once they start, giving out revenue, till then the profitability is going to be suppressed. They have around 1,000 crores of investment, and they have around 500 crores of cash. So 1,500 crores of cash they are holding, which is very good. So on a 11,000 crore market cap company, they are holding around 15%, 14-15% of cash as compared to the market cap. Very healthy balance sheet, guys. Okay, let's look at the profit and loss. If we see, the sales have actually not gone anywhere. It's since 2016, now we are in 2021. The sales have not gone anywhere. But since the operating profit margin has become better, the overall net profit has become better. So if we see from 2017, profits have almost doubled, right? What has also gone up is the depreciation. Depreciation has gone up because they've incurred capex, and that is the reason why the depreciation has also gone up. So once we have the new pipelines laid and the revenue starts kicking in, we will see a sudden spurt in sales. And if they are able to maintain this margins, we'll see a sudden spurt in sales and profits as well, right? Quarter on quarter basis, June numbers are pretty good. Obviously last year, this is a lower base because we were deep in the pandemic, right? But this is an essential commodity used by people. So so overall this dip, maybe maybe this could be because they might be providing gas services to commercial operations also, and that must have dipped, because otherwise people are using the same amount of gas, because they are eating 2-3-4 meals a day. It's not like because there was pandemic people have not eaten. So this is an anomaly. I mean, if you really want to buy this stock for long term, you could go and check the AR Concall and find out, right? But overall, clear traction in terms of quarterly reports, right? If you see, March numbers are higher, June numbers are higher, profit is also higher. Let's do a PE analysis. So the median PE is around 16, On a 5-year basis, the median PE is around 18. Stock is trading at a PE of 15, right? So, the least returns that one can expect from this stock is at least it reaches till 18, 19 P. So on a EPS of 79, trailing EPS of 79 into a PE of 19, we can expect MGL to reach at least 1500. So that's roughly 300, 400 points from here, right? So that's a 35% returns at the very least. And then when we hold it for 2 quarters or so and we have good traction, we have accelerating growth, then it can probably go further higher, right? So yeah, now let's do a technical analysis on this. This is the technical chart of MGL. If you look here, since April 17, it's been almost 4 years, the stock has not done anything, right? The stock is just going sideways. But if you look at, the profit and loss, this profit has doubled. Sales has not gone anywhere. Another reason, so basically, institutions look for growth, guys. They want growth in the company. This growth has come on the back of operational efficiency. If you see, the operating margins have become higher. But going forward, how much operational efficiency can you bring into the company? There is a limit. Once you reach that, it's difficult to reach a much higher operational efficiency. So now the breaking point is that the sales should start kicking in. So what's interesting over here is that pre-COVID the sales were rising, right? So there was almost 20% growth in sales. They were flat over here since 15 to 17, but then the sales started rising. But then there was COVID, and then this has sort of gone down. So we'll have to wait for things to stabilize, and we watch it for the next 2 quarters, so that some sort of revenue recognition comes in from the new pipeline activity as well. So what sort of strategy do we have here? We know that the PAT has doubled. So my guess is that this stock should be ready to move up at least 50 to 60% from here on, right? From a technical point of view, what is happening? The stock is basically now consolidating within this range. This is a 15-16% range within which the stock has been consolidating. So it's been consolidating since Jan, right? So let me just say this. This is the area. This is the 20% range within which the stock has been consolidating. So now we see that there is clear traction in March and June numbers. So going forward, we can make a calculated bet that we can get accelerated earnings going forward. Once things are normalizing, lockdowns are easing up, things will open up, right? From a technical point of view, if you see when the stock is correcting, the volume is relatively low. Over here as well, relatively low, right? So this is a sign that the supply is diminishing. This is a sign that the supply is diminishing. So what sort of strategy can we adopt over here? We can start buying the stock within this range, within 1060 and 1180. This is the range where we can start accumulating the stock. What sort of targets are we looking at? So at the very least, I'm looking at a target of 1500, 1550, and hold it for 2 quarters. If the next 2 quarters the earnings are good, we can see more momentum in this stock. We've already seen Adani Gas perform very well, and overall the government is pushing for gas at every home. Gas subsidy was given a couple of years back, and plus with good infrastructure, we'll see we'll have households having piped gases, and good access to this. So overall long term view of the industry remains pretty solid, right? So this was the analysis, guys. Thanks a lot for watching. Quick disclaimer, this is not a buy sell recommendation, it's an educational video. Thank you.